All right, y'all, how's it going today? So today, just for the 4th of July for you guys, I'm going to total breakdown of PayPal with some simple TA, technical analysis, and then we're going to talk about how to take some actionable trades using some of this TA, right? So we'll go over a handful of different setups and just kind of what I'm seeing here and how I'm analyzing PayPal, as it is on my radar, and we do have earnings coming up, so this is definitely something I'm watching out for, right? So pretty simple here, right? So we have a major support level here, right? So we bounced, get this out of my face. So we bounced here back in July in this 67 area and came all the way up to 100, right? And then we traded down back to that same level, bounced up to like that upper 80 area, right? And then we get this big breakdown candle here, go below that level, right? And you see all the volume down here, right? And this could be a type of capitulation volume here, right? And this could be a quote-unquote fake breakdown, right? Especially if we reclaim this level here, right? But this is a pretty, it goes back. So back here we had, back in December of 2017, we had a little bit of a bounce, kind of bounced just above it, a couple other times before, right? And then the other level I'm watching on the upside is the 120 level. That's another major level, which is, July of 2019, and then the pre-COVID high in February of 2020, right? And then we broke down from that level, came down to 93, bounced, retested that level, and failed down to that major support level that we're talking about right now, right? And then the other thing is we've got this trend line that's been rejecting price all the way down, okay? So, we rejected in this area, here, 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 and here, okay? So we've got 1, 2, 3, 4, 5, 6, 7-ish rejections from that level, and now we're coming right back up into that level, right, which is also the 20-period moving average on the weekly chart, which is about 70, right? So that this trend channel is kind of in like that upper 60 to low 70 area, right? Now, normally this is a short setup, right? But, with the simple fact that, I think this is, you see all this volume here, I think this is kind of like a capitulation volume and a potential fake breakdown setup, right? And we're looking for this channel to break to the upside. But let's point something out here. I know there's a lot of RSI haters out there, but to me it works, right? And I love trading divergence, and that's basically all I use it for. I don't do the overbought, oversold thing, because to me that doesn't work. Look, this was super oversold down here at 100, and it still ended up trading down into the 60s, right? But what I do want to point out is RSI made a significant low here, right? And then it made a higher low here with this new low in this fake breakdown area, right? So you have up here, PayPal made a low, it made another low, made another low, and then it made a new low, right? But RSI did not make a new low, right? So that is bullish divergence, right? Which I love to trade. So this is looking pretty good for a possible swing trade setup. Now the other thing, let's kind of zoom in here. If you look at the daily chart, so we made this low here, right, which was 58.95, and we came up, and then we made a higher low, and then we came up again, and we made another higher low, right? And we're trading right into this major level here, right? And for now, we're just kind of consolidating above it. This green line is your 20-period moving average on the daily, which has provided support here and a little bit right here, right? So that's bullish to me also. So we're making higher lows and higher highs. We're trading above the 20 period moving average. We have that bullish divergence on the weekly chart. So to me, this is setting up for a nice little swing trade, at least if you're a short-term trader, into the earnings, right? Now let's look at the volume on the volume profile from this major breakdown area. So in the short term, before earnings, where do I think price is going to go? Right, so we have this gap up here too. Okay, so that's something to make note of here. So that runs from 69.68 to 74.92. Okay, so the volume is pretty thin in that gap, and as we all know, gaps do like to get filled, and you can kind of see it on the volume profile, right? Minus this point of control here, this red horizontal line, that's the point of control, right? So at the very least, leading into earnings, I think we are going to gravitate into this gap fill. What the hell's going on here? Into this gap fill here, okay? So there's a lot of kind of overhead magnets, right? So the top of this trend channel should be a magnet, the point of control, the gap fill, and then we have the 200 period moving average on the daily, right? All in this 72 to 76 range, right? So I think PayPal probably trades maybe up into 75 pre-earnings, okay? And then, you look at the 200 period moving average, we already got the underside test here, the underside test here, kind of a fake breakout above and then back below, so usually you see a rejection on the first try, sometimes the second try, but if it's a good stock, then the third time it's not typically a short setup. So really, honestly, what I'm looking for is possibly a run up, like I said, into that 75 area pre-earnings. And then if we get a good earnings report on August 2nd, we can get a pop back above this 200 period moving average and then possibly trade into this value area high here in the upper 80s, right? So and you see that's where price got rejected back here in February, okay? Let's go back to the weekly. So where else can my upside targets be, right? So here's a level right here where we pivoted from in the lower 90s, 95-ish, right? Also kind of price rejected in this area as well, okay? And then I think if you go back, so a lot of traffic in this area too, right? So here's a level up here at 100, okay? So, at the very least, I'm thinking price goes up into that 200 period moving average on the daily, okay? And then some of the levels we have on the upside are this level right here, which is also the value area high. So we had price reject here, price reject here, price reject here, okay? And then if we go back, a little bit of a reaction in this area back here. And then same thing, this level reacted back in the past in 2018, okay? So that is like kind of the medium term target for me. And then I'm looking, before the end of the year is over, I'm looking at this 100 area, okay? And maybe as high as 120, okay? That's kind of the big breakdown area, right? And that's also the highs from back in 2019 and 2020, okay? So that's kind of what I'm looking at here. So let's mark that. I'm going to mark that on my chart. So really, all right, we'll go with that. We'll go with that. I don't want two of them. All right. And then we have the 120 level above, right? So pretty simple. And then one more simple TA. So let's pull out the fibs. So we also have some confluence here with the fib levels, right? So we've got from the breakdown area to the lows, we've got the 50% fib retracement at 90.88 and the 618 at the 98 level, which, you know, pretty close to this 88 level, which is also the value area high, and a number of price reactions, right? So this area definitely of interest, and then this area also, right? So the 618. So there's a lot of confluence of levels there. So, and that's what I like to look for, is confluence of levels as well, okay? Plus we have the bullish divergence. So everything's kind of lining up here, right? So now let's talk about what kind of trades we can make, okay? So let's go. Oh, shit. Okay. PayPal. So like I said, earnings is August 4th, okay? So what I like to do, as some of you know, is I like to do pre-earnings calendars, okay? So I'm looking to be long the strikes that are the week of the earnings, okay? And then I'm going to sell an option a few weeks before, okay? So let's look at July 21st. So that first target for me is like in that, like I said, 72 to 76 area, but let's go with 72, because you look over on the far right of July 21st in the options chain, the expected move is about 4, right? So I like to usually sell the option at the expected move, right? So for this week, the expected move is 4. PayPal's at 68, so I want to go 4 points above that. So we're going to sell the 72 strike call. And then for August 4th, I'm going to buy the same strike, okay? And, you know, this is trading for about 92, 0.92, okay? And, you know, this can trade up to 72, and we can just close the trade out for a 30% profit, which is usually what I look for on these pre-earnings cows. Or we can roll the strikes, right? So we can just simply sell another strike on top of the 73 or 72 strike call for August, right? So if this 72 strike call for July 21st expires worthless, then I can simply sell the 28 strike, or the July 28th 72 strike call, or, you know, I can do it at the expected move again, right? So let's say, you know, it gets to 70 and the expected move is, say, 4, right? So then I can sell the 74 strike call, keep that 72 strike call for August, and now all of a sudden I've kind of legged into a long diagonal spread, right? Or I can do, you know, maybe a debit spread, and I can sell like a 76 strike call for August for the same expiration. Now I just legged into a debit spread, right? So basically what I did there was I kind of financed a debit spread and kind of legged into it cheaper, right? But, you know, let's not get too complicated here. I'm trying to keep it simple for you guys. So let's look at the deltas here, right? So this is about a 10 delta. So if PayPal moves up to 72, this will definitely hit about 140. So that will be my target, okay? So about 130 to 150 will be my target exit on those. I can hold runners for a little bit longer, right? And then let's look at it on the Option Strat app. So let's see, 21. That's a long call. All right, so we want to sell the 72. And then this one, buying this, okay? So, so this will kind of tell me what the risk profile looks like. So if we trade up to 72 on expiration of July 21st, we'll make $117 off of a 92 debit, which is over 100% return, right? But I'm thinking it hits before then, probably by mid-July, right? So if it hits by mid-July, we're looking at about $40 profit, which again is over a 30% return, and we're out and we're happy, okay? And if we get to that point, then we can look at, possibly rolling into a higher strike, okay? But that's kind of the basic setup for me. If we trade up into 72, we should be out for 30 to 40%, okay? Now, so the other scenario I'm looking at is kind of, I'll give you guys like a longer term setup, and that's, I'm looking for like a longer term butterfly spread. So, because I think by the end of the year, we hit at least 100. And I wouldn't be surprised if we hit 120. So what I'm going to do is, and I don't do long-term butterflies very often, but if I do, I make them significantly wide. Okay, so for this one, I'm going to do like a 30 wide butterfly. Okay, so I'm going to buy the 90, sell 2 of the 120s, and buy 1 of the 150s very cheap, right? So basically, I'm selling 2 of these 120s for a 0.40 credits. So basically, that's just making this 90 strike call cheaper, right? By $80, okay? Plus the $17 for that, okay? And I think that 90 strike call can go in the money to 100, right? Which, if you held the 90 by itself, you're going to make $800 at expiration. But what we're doing here is we're actually just lowering our cost basis. So it ends up, you make a little bit more by 870. So you're not affected by theta as much here too. Okay, so this is just kind of a patient swing trade setup for me. Okay, so we're looking at a call butterfly for January with 90 long, 2 120 short, and 1 150 long. And then let's look at this in the option strat app. So let's get rid of, well, actually we need to add another long call. Okay. To slide all the way over here. Oh, there we go. This doesn't want to give it to me. Okay, well this needs to change there. This guy needs to change there. Okay, oh, there we go. Okay, now it fixed it. All right, we need 2 of these. Okay. There we go. Okay, so if PayPal gets to 100 by the end of the year, we will make $963 on this trade with only $128 of risk. Okay? So that's a pretty good setup to me. And if somehow it absolutely rips to 120, we'll make almost $2,000 on $128 of risk. Okay? And to me, this is just a set it and forget it trade, right? So I'm going to put a handful of these on, okay? And I'm going to sell them at a double, okay? I'm going to sell half of them at a double. And then I will hold, a small handful for that 100 target area. And then I might hang on to one just to see if shit gets crazy and we get to 120. Not likely, but, anything's possible. So, even if we get to 88, which I think is very likely, we will get our double, right? So I'm looking to at least double my money here, right? And if it doesn't happen until the end of the year, which I think getting to 88 is very possible. This is an easy swing trade for a double, right? But if it gets there even faster, let's say by the end of the summer, right? Let's say by September. Okay, if it gets to 88, then we make $376 off of $128 of risk, right? Which is, over a 3x return. Okay, so not too shabby, right? So we've got the pre-earnings calendar set up on PayPal, looking for a revisit of the 200 period moving average, getting back inside this channel and filling this gap, okay, which is up in like the 75 area, okay. And like I said, if that short call expires worthless, we can close it out and then roll that up to like a 74 or a 75 short call and just leg into a long diagonal spread, right? So, and as we approach earnings, this is what I like about these pre-earnings calendars. As we approach earnings, that 72 strike call for August will appreciate pretty significantly due to IV rush, right? Most of the time leading into earnings, call contracts and put contracts get more expensive as IV increases and the contract value increases via Vega, okay? So I'm kind of looking to double dip here by gaining value from Delta and from Vega, okay? And then we also have Theta working in our favor because we're selling that July 21st call, okay? So, that's kind of the basic setup there. And then, like I said, I'm looking at that swing trade setup on PayPal with the butterfly for the end of the year. I also have a June debit spread where I am long the 75 strike call. I'll just kind of show you guys here. So I'm also long, and this is more of an expensive trade. Come on, go away. You got to be fucking kidding me right now. All right, there we go. So this is for June of next year, and this is a longer trade, right? More patience and, a little bit more expensive, right? But to me, this is a high probability setup. I would say high probability PayPal is trading over 100 by next year, okay? And I entered this for about a 5 debit. So right now it's about a 6, so it's still not too bad, right? So the maximum upside on this will be about 25. So we're still looking to make about, a double from here, and the max is over almost a $2,000 gain, okay? So pretty good trade, pretty good setup. I've got PayPal on my radar. It's already, I'm already in that debit spread for June of next year, and I am looking for an entry on that pre-earnings calendar on Wednesday. And then I'm also going to be looking for an entry on that butterfly for January. So that's all I have for you guys today. Hopefully you learned something, and hopefully you have a good 4th of July. Enjoy the rest of your day and take care. All right, thanks. Bye.